late. This is absolutely my fault. I had another meeting that overran, and I take responsibility for that. But we are gonna have some really good content. We're gonna have a couple of key discussions. We're gonna talk Ethereum ETF, how it's been going so far. Fabio and I actually watched the Trump speech around Bitcoin live. We wrote a bit. We had a conversation about this afterwards. So we're going to discuss that. We have the tech crash. We have the Fed meeting actually today, Wednesday. So let's kind of see what's going to happen there. And we're going to have a potential altcoin season that we want to discuss. I'm going to give you a bit of an update on the bake side. I hope you have been following the daily videos. I'm going to share a bit on this. And I think it's going to be the goody woody. With this, Fabio, how are you? Welcome. You look great. You look, give us a bit the bird's eye view. What's going on?
Thanks. Yeah, jam, everyone. Well, I'm super happy actually. European summer has arrived, even for the Dutchies. It took a while, like until end of May or so, or even into June. We didn't really have a lot of sunny days, and now summer has finally arrived. That's amazing. And I wish I could say the same for the crypto space, that the bull season or the bull run is finally starting to go. But we're holding up in this, I don't know, nirvana zone between 58K and 72K since quite a while, actually. And historically, it was the longest consolidation below an all-time high that we've ever seen. And people kind of get impatient, especially, and we're going to touch on that later in the video, especially people that are more heavy exposed in altcoins, because they have been the ones that suffered the most and are kind of waiting since a while for a potential altcoin season. And it kind of feels frustrating to have that long of a consolidation, even though we have a crazy amount of bullish news. I mean, some of the things you already mentioned, like the ETH ETF, like the Bitcoin conference that happened last week, and many more things. So yeah, I don't know where to start.
What is your favorite topic right now?
Maybe before we go into the ETH ETF specifically, I would love to maybe just mention 60 seconds or 90 seconds on the Bitcoin conference that we saw last week.
Yeah.
So,
but that's basically Trump stuff. What do you want to do as a high-level Bitcoin conference and then deep dive on Trump, or keep this separate?
Yeah. High level first, and then we go into, I would say, the most talked about speech, which was, of course, the one from Trump. So on a high level, we didn't really get these crazy announcements that we usually got. So there's 2 or 3 things that stuck out. So there were 3 days: Industry Day 1 and Day 2. It was the biggest conference ever. They switched location from Miami to Nashville. And usually around this time, so the predominant things when it comes to Bitcoin conferences, the price usually dumps. And there are some crazy announcements most of the times. This time wasn't really that much of, I don't know, product announcement or nation state adoption or whatever. It was more on a high level, very political. I think there were more than 10 senators there. We had 2 presidential candidates, or 3 if you count Vivek Ramaswamy to the club. He's no longer a candidate, but he used to be. And so the larger theme was political and institutional. You had many people from Fidelity, Bitwise, BlackRock attending the conference and talking Bitcoin. You had major institutions, and maybe on the announcement front, we have 2 things that excite me. Is one announcement from Casa. They have this open source way which you can sign transactions and secure your Bitcoin in cold storage with a YubiKey. Anybody that doesn't know what a YubiKey is, I would urge you to look into it. It's basically the best way to kind of secure your online presence, going from a Google account into your crypto wallets and whatnot. YubiKey is really probably right now one of the best and easiest ways. So there's like this scale between ease of use and security, and YubiKey kind of hits both on its head. And then the other one was Ledger coming out with a new device. So they have Ledger Stacks and Ledger Flex, and the Stacks is the one that they announced, I think, 2 years ago. And now they have Ledger Flex, and it's actually pretty affordable. It's like mid 200s price range, and it's somewhat of a third device that helps you with 2FA. It's sort of a YubiKey, and it's a hardware wallet at the same time. So it's pretty interesting. I'm probably going to get one. It also looks pretty cool. And just fun fact on that, Ledger shared some stats. So about
Oh,
7
really?
million.
I didn't see those.
So what they said is 7 million Ledger devices currently hold and secure around 20% of all Bitcoins. I think it's a pretty mind-blowing stat, pretty bullish for Ledger, I guess. Even though they had a lot of bad press, they seem to do fairly well. Yeah, maybe that's on a higher level when it comes to announcements. And then, of course, the juicy ones we had, especially RFK and Trump.
And Saylor, what do you think Saylor? I mean, I would love to know, how is Saylor perceived, right? Because to me, listening to his presentation, I don't know. I feel, to me, this is like too much rah rah. I don't know. It feels. I I watched three presentations only. That was RFK, Saylor, and Trump. And Saylor's this time. I don't know why, something rubbed me a bit the wrong way, but that was me. I don't know if other people had a bit of had a completely different, and I assume I would love to see how. I would love to hear how you perceive this, and maybe what did other people say. To me, the most positive one was RFK, out of the whole thing. But he, in my opinion, also had the easiest one, because to me, he could just make a lot of statements. I mean, we're going to discuss this afterwards. To me, he made a lot of statements that he can just make, and with little responsibility. So that was just at least my kind of thought. I would have put Trump in the middle. For me, Saylor was the worst. But yeah, I would love to hear how you kind of saw that.
Well, of course, the big expectations when Saylor is going on stage is, how bullish is he? Can he even be more bullish than he was in the past? And I guess the answer is yes. Like, he was crazy bullish. And I don't know. I found his speech actually pretty good. And like, I think the thing that he makes it sound so easy, and it actually kind of is, because all he says is you basically buy Bitcoin with the most amount of money that you possibly can, and you never sell. And it sounds so easy, but it's actually super hard, because there's so many other things that kind of scream for attention. There's so many things that may outperform. There's so many, I don't know, you need a lot of conviction for it, and so on. And he's basically just this cold-hearted, like even a bit boring dude that just says, just buy it and hold it and do nothing else. And it's not really exciting. He's not building something special or so, but it seems to be working quite well. Like, he's outperforming all of the major tech stocks.
Yes.
And it seems to be working out extremely well for him. And he was extremely bullish, and he basically gave away his playbook for free. He even, like, his playbook is very public, and everybody could basically copy him. Yeah, I don't know. If this thing that he does, where he leverages his company and like the cheap debt, and basically just keeps buying Bitcoin, and if this is actually going to work, this thing is going to be studied 100 years from now as like, yeah, it's so simple that it's always almost too good to be true. Like, yeah, I don't know. But yeah, the speech was basically just him being bullish and him buying more Bitcoin and urging others to do the same. That's all he did. And if you're bullish on Bitcoin, of course, you kind of like that, I guess. Yeah, but if you haven't watched the speech, go watch it. It's 37 minutes of Saylor being extremely bullish. Yeah. He gave some price targets, by the way, which his bear case is 3 million, I think, and his bull case is 52 million in 21 years, so 2045, which are some numbers. Yeah.
Okay, let's talk Trump. Or what do you want to do? RFK first or Trump first?
Yeah, I mean, you basically summarized it perfectly. RFK came in first. He knew that Trump was speaking as well. So if you're RFK and you're kind of preparing, to speak before Trump's. You have some preparations to do, and you can basically promise the world and you kind of need to, because you want to set the bar high, and you want to set it so high that Trump cannot reach the bar. And that's what he did. He promised the world. He promised that the US is going to buy 4 million Bitcoin, 500 Bitcoin every day. He promised everything that, and like, it was a Bitcoiner's wet dream. What he did, and amazing. I mean, everything that he said, amazing. Is it actually feasible? No, of course not. Nobody will ever be buying 4 million Bitcoins, also not the US government. And is he going to be president? No, probably not, because the chances of him, he doesn't even show up in the betting markets and in the polls. Like, he doesn't really have the strength for the possibility to even become president, so he can basically say whatever he wants. And yeah, that kind of set the bar for Trump. And of course, yeah, I don't know. Maybe you can start with your impressions from Trump, because and to maybe set the playing field for you to kind of start explaining. Trump's speech was interpreted in two very polarizing ways. There were a lot of people that are disappointed. There was like, it was boring. It was just him rambling on. It was a campaign speech. It was not as good as RFK's. And then you had other people which were extremely bullish and were like, that's everything we could ever hope for from a presidential candidate. And I don't know, what's your take on this?
Okay, a couple of points. I agree with you that the fundamental problem, I mean, Elon has this really good explainer, which is happiness, or how happy you are about something is reality minus expectation. And what's left over is your happiness, right? And so the issue is that RFK came in with these super high expectations. So I think for Trump, it was so difficult to actually provide a reality that was somewhat kind of realistic when it comes to like subtracting expectations and people being happy. And I think that was the fundamental issue in the sequence. And I don't know if the conference organizers didn't anticipate that or didn't foresee that, or if this was just a scheduling thing. But I think this was the fundamental problem as the setup. And I think that was impossible for Trump, who, I mean, also poll wise, is the most likely president in November from today's standpoint. Obviously, he has to be a bit more careful in what he's promising, because he has to kind of follow up on that, right? And so someone who, like, based on polls, is a 0.2% chance of being president, obviously you can say what you want because you don't really have to follow up on that, right? So the virtue signaling part is so much easier if you don't have to follow up on this versus someone who actually has to follow up on this. So I think this is the fundamental issue. The second fundamental issue is that I believe 99.9% of the people who watched this speech have never seen another Trump speech. So they don't know how Trump speeches are. And I think in my life, I probably watched maybe 2 or 3 speeches in its entirety. And I don't know, it's just how he talks, how he is with his hands, and how he's very self-promotional, and how he, I don't know, dumbs things down, and how he is very well coached in what buzzwords to use, but actually doesn't fully understand the matter. And you could see that he was, he's, Trump is definitely not a Bitcoiner. He is not even a crypto person. He understands the game and he plays the game. And I think people understood this there. And I think that's what people kind of criticize him for, right? For not being like RFK, not being the virtue signaler, not being one of us. And I think that is all kind of falling in there. And so, with that notion, people really discount, in my opinion, all the things that Trump did say that are, in my opinion, things that I would have never imagined when I got into this space 10 years ago. And I think this was absolutely incredible. It is incredible to have in the most likely candidate to be the president right now to come out on stage and talk about that he does not intend to sell bitcoins from the treasury, that people should hodl, that, like, talking about Bitcoin, talking about crypto. I think that was also interesting, and I understand that this rubbed people at the Bitcoin conference a bit of the different in a different way, or the wrong way, because he talked about crypto a lot, not so much about Bitcoin. And I think a lot of Bitcoin maxis, they're like, it's Bitcoin, not crypto. And Trump clearly kind of talked about a different in a different kind of style there. For me, this was a super strong net positive. There's not a single bit of a net negative in that. I get it that you can always want more, but that is an issue about expectations, not about reality. So, and at the end, the market really showed this. The market was really volatile during his speech, and yeah, I mean, it was insane. I was at the airport at that time. It was a Saturday evening. I was at the airport, and I almost missed my flight because I was just waiting for my flight. And yeah, and initially I was like, oh, this is gonna be super easy. I'm gonna watch this, and it's gonna be super easy, blah blah blah. And then I almost missed my flight. So yeah, it was a bit of a chaotic kind of thing as a whole. So yeah, but very interesting. Um, Definitely positive. I don't see any negative there. I mean, the negative that people think is, oh, he could have done way more. Sure, anyone can always do more. That's my Trump thing.
Well, let me maybe just add one thing. So there's the main criticism that I see from, I don't know, people everywhere on social media and so on is, yeah, but he's just a politician and he's just pandering. He's just saying the words that you want to hear. And I said, exactly. This means that we as a cohort are big enough and relevant enough that major US presidents think it's strategic and it's important to attend a meeting like this. And we're talking like even Kamala Harris, like even she thought about attending the conference. I think it's good that she didn't. But tell me one industry in the US worldwide that is important enough for all major US presidents to think about or even attend to the conference and speak positively about this. Like if you turn back the clock 4 years ago, and I would have told you that the president that is the potential next president of the United States is going to speak at the Bitcoin conference in its election years, everybody would have lost its mind. And I can just not understand how you can be disappointed. He said everything we wanted to hear and more. And of course, he did it the Trump way, in an incohesive, rambling way, like, I don't know, like yeah, but I mean, there's nothing more bullish than this. Of course, you can ask the question, is he actually going to follow through if he's going to be elected? Is he actually going to free Ross? Is he actually going to fire Gary Gensler, ending Operation Choke Point 2.0? I don't know.
I would think so. I would think so because that's exactly why I think he said the things he did. I don't think the things he said are that difficult to execute. I think it would be very obvious for him to get Gensler out anyways, because he is not a Republican candidate anyways. So I think that's a no-brainer. Anyways, not selling the Bitcoins. I mean, there's a whole new different discussion. How many Bitcoins are we actually talking about? Because then afterwards, a lot of people were saying, hey, what is he even talking about? These are Bitfinex's Bitcoins. They are not they're US's Bitcoins. They belong to Bitfinex. So the question is, how many Bitcoins does the US government actually own, right? So maybe this is just even not that many. So yeah, and I don't know. I think the other parts about being in a pro innovation, being less regulation, that's the Republican way anyway. So I actually think it's very, very straightforward.
Well, agreed. And the funny thing now is, like, is it coincidence? Like, I'm tinfoil hat
Right
on my
afterwards.
head right now. Is it coincidence that 2 days or 3 days after, RFK and Trump said we're not going to sell the 200,000 Bitcoins or whatever the Bitcoin they hold, is it coincidence that the US government is moving them, or 2 billion out of the whole pack just a few days afterwards? And just let me maybe, okay, I have my tinfoil hat on right now. Let me paraphrase something that I saw in a tweet that is actually pretty mind-blowing. And here, I'm talking game theory here. So I pulled something up and I'm going to paraphrase. It's just going to take 30 seconds or so, but just think about it. The Democrats dumping Bitcoin just to spite Trump is literally the best thing that can happen for the Bitcoin community. Why? First, they basically guarantee that every Bitcoiner will vote for Trump, thereby ironically ensuring that the Treasury Reserve Asset Plan is implemented. Second, once they dump Bitcoin just to spite Trump, Trump will 100% for sure buy it back just to spite them. Three, which makes it unlikely that that is an orchestrated dump to spite Trump. What if just what if they are moving it to add to the treasury ahead of Trump to win over the Bitcoiners? It's basically the only way they could one-up Trump after his national speak. This is game theory playing out. So it doesn't really matter what plays out. All of the outcomes are actually bullish. But that, of course, it's a bit on the conspiracy side or on the super hypermania, hopium, whatever. But interesting point to think about.
Talk about the. Do you want to talk about Ethereum ETF?
Yes. So of course we anticipated this. It was a talking point for maybe 6 months, and my thoughts on it were that we first need to bleed out the grayscale amounts, and basically the arbitrage to happen and so on. This means that it's buy the rumor, sell the news, which was basically playing out a bit, and that Solana is going to pump after the announcement, which both of those things actually played out. But, and here comes a big but, the volumes that we saw on this thing were pretty astounding. We're talking about 20% of the volumes that Bitcoin had. And we the first 2 days were over $1 billion in just flows, not net inflows, but just the flows were I think north of $1 billion, which is crazy. And I think the same thing is going to play out for Ethereum as it did play out for Bitcoin. Namely, we see GBTC bleeding out and the volumes just jogging along, ticking along, and basically creating more scarcity, and eventually the price will move up. So I think after we had the initial sell-off, right now is probably a good time to be bullish on Ethereum. That's maybe the bird's eye from my side. What do you think?
I mean, very interesting. I mean, yesterday, 30th of July, Tuesday, was the first day that there was a net inflow. I mean, leave out the first day. I think the first day is not that representative. But so it looks quite interesting here. We've had massive outflows, hundreds of millions. Now we're seeing inflows. So what else do you want to add there?
No, look, I think in general, Ethereum kind of suffered a lot since the merge. Like if you were just looking at it from a price and from a narrative perspective, basically Ethereum lost about 40% in 2 years. It was exactly 2 years ago, I think in August or September, 2 years ago when we had the merge, when they moved from proof of work to proof of stake. And the price since then, basically lost 40% in Bitcoin terms. And narrative wise, it's basically like a teenager that is growing up a bit, and a bit of the forgotten child, maybe. There is a lot of other things that kind of came up during the 2 years, maybe some gaming, maybe some AI. And of course, Solana with all the meme coin casino basically stole a bit of Ethereum's show and attracted a lot of newcomers. And Ethereum didn't really have this single narrative where they could really, pull in a lot of funds. I think that might change now just because there's two ETFs, and so you have Bitcoin ETF and you have an Ethereum ETF. It might be a while until we see another ETF, and for a lot of institutions and for a lot of let's say bigger funds or so, they are probably just going to get an allocation into both of them and probably weigh their allocation in a market cap style. So they're probably going to go, I don't know, maybe 70% Bitcoin, 30% Ethereum, 80% Bitcoin, 20% Ethereum, and the flows will just keep chugging along. So I think in the long term, the ETF and that Ethereum got its ETF is super bullish. I think in the long run, to kind of work out the efficiency, they definitely need to add staking to these ETFs. But I think that the future for both Bitcoin and Ethereum is probably going to look quite bullish from here on out. It just might take a while until GBTC is fully bled out, and that we really see the retail run up coming.
You want to talk about this chart I'm pulling up?
Yes. So on YouTube, we just pulled up a chart. I stole that from Benjamin Cohen, but it basically is the Bitcoin dominance minus stable coins, which gives you a chart that looks like it wants to repeat. And we are holding up a certain trend line right now. The last time this broke was in 2020, I think, when summer of 2020, when we got a rate cut. And when we finally had that rate cut, slightly before the rate cut, altcoins basically capitulated on their Bitcoin pairs. And a lot of people, especially Benjamin Cohen, is making this point since I think 3 years, that this is going to play out very similar this time, that we are probably going to see a rate cut in September. And before the rate cut, that altcoins have this major sell-off, are going to consolidate. So we're talking about a 30% correction on their Bitcoin pairs. This doesn't mean that USD pairs are going to get super low, but it means they will break down on their Bitcoin pairs, have a consolidation, and then we can finally see an alt season. And just historically, like I was probably saying that, I don't know, quite a lot of times during the last year or 2 years, actually, because I think Benjamin Cohen is somewhat right on this, is we're still in Bitcoin season. Bitcoin just ticked, Bitcoin dominance just made a new all-time high, almost 57%. And usually Bitcoin season ends about 6 months after the halving. So this would put it somewhere in October, November or so. And I think this time is probably not going to be any different. Julian and myself had a bit of a back and forth, what is mainly driving altcoins this time. And I'm under the strong opinion that altcoins are basically just a consumer confidence index, like a confidence and liquidity. So if the Fed is going to cut rates and the confidence is coming back, it doesn't really matter what kind of narrative or what kind of sector that these altcoins are in, they're going to pump regardless. Are they going to make an all-time high? Probably not. Not most altcoins don't make a new all-time high measured in their USD or in their Bitcoin pairs, but they're definitely going to pump. And I would put it the start of altcoin season probably a few months from now, maybe September, October, November, somewhere in that time period. I don't know, how do you feel currently about this narrative about, let's say, altcoin season, Bitcoin season? Yeah. So
yeah, I mean, we had this conversation prior, right? And to me, crypto is so narrative driven, and I'm just not 100% sure what's the narrative to drive that on a larger kind of general altcoin season. So we've seen this last year with the AI coins. I don't think this was an altcoin season, but a lot of the AI coins did insanely well until they didn't. And it was the same with a lot of meme coins who did insanely well until they didn't. So I don't know. To me, and I mean, I love that idea from you with the consumer confident thing or the speculation confident thing. Before we see this, I think we need to see a very strong kind of narrative again. And it's going to be, I mean, that's a general question right now. What's going to be the narrative right now? Because the halving is done, Ethereum ETF is done. Trump, even if he wins, it's all priced in already. I would think so. Is money printing the only narrative? And I mean, it's an interesting one here. I have the, you gave me that slide. Do you want to share what's on there?
Yes. So we basically see a price chart from the beginning of the year until now with all FOMC meetings on there. And every single meeting marked a local low, except one. And the one that didn't mark a local low was connected with CPI. So maybe, just maybe, the FOMC meeting that we have today is going to mark another low, and we are going to, test higher price levels from here. The question is really, right now, the market is pricing a 4% chance of a rate cut, I think, tonight. Tonight is the next Fed meeting, and they're pricing in an 85-ish % chance that we're going to see a rate cut in September. The question there is, how bullish is this, and what is the exact reason for the rate cut? And I guess a lot of people, especially in the macro world, are talking about this time is different because it's not going to be related to inflation. It's not going to be related to the economy, but it's basically connected to the bond and to the treasury market, and that they really need to cut rates because of debt issues and because of let's say structural issues within the treasury markets. And the question then is it just one or two rate cuts? So are they just going to cut from 5% maybe to 4.5%? Or do they really need to cut hard because there are structural issues? If it's the first one, if it's only going to be one or two cuts, I think it doesn't really make a difference. But if there are structural issues within, let's say, the treasury market, and they really need to address this, then this is probably going to be super bullish. Like, then we're probably going to see inflation coming back. We're probably going to see money printing 10x, like really putting it all out. Yield curve control on the max end, let's say. If this is going to play out, I don't know. We're probably going to see the most historic bull market ever. But then again, we kind of don't know on how bad is the structural issues in the treasury market. And there is so many factors that, like Japan right now, and the inversion of the yield curve, that nobody really wants the long end and everybody wants the short end. It's a pretty unique situation. I don't think we've ever been in a situation where we had this much debt with the rates this high. You pulled something up on the screen. Maybe you can share a bit on that, Julian.
Yeah, because I mean that's going to be an interesting one. I mean today we have a Fed decision. Everyone expects no change, but I mean you mentioned structural issues, right? I mean I think at the moment we don't have them as much yet on the bond market. But one thing that is a bit crazy is the drop of tech stocks over the past couple of weeks, and it's been absolutely insane. You look at, like, I pulled up over the last couple of weeks the top seven, so the Mag 7, we talked about them a lot, right? So that's Nvidia, Microsoft, Amazon, Google, Apple, Facebook, and Tesla, have lost together $2.6 trillion in market cap. Just kind of put this into perspective, right? That's more than crypto has as a whole. Nvidia alone dropped 23%. That's $800 billion. So yeah, there are some considerations there, right? And if you kind of see it this way, if you kind of go back a bit, where we're like, why is crypto selling off but stocks are still doing well? We kind of getting back to that entire idea that maybe crypto is just the canary in the coal mine, just very an early indicator, and it was, and very interesting, right? So one of the plays could easily be, you see what crypto is doing, and maybe 1-2 weeks later, that's what the tech, the Nasdaq, and so on is doing. So it could be an interesting one. I hear there's a lot among kind of investor friends of mine that are looking at that a bit, kind of backtesting that a bit, seeing on why this could be. Is this actually a trading opportunity going forward? Very interesting kind of thinking here. So if you keep this a bit in mind, I do think we're going to see the Fed cutting rates in September, not today. And but yeah, the interesting question is going to be by how much in September. Is it going to be a quarter? Is it going to be half? Is it going to be September, November, December? Is it just going to be September and November? The November rate cut would be right after the election. So quite an interesting one. And I mean, I agree. If the rate cut comes just as a normal kind of movement, I think this is constructive. If it comes as a panicky reaction, this is very dangerous.
Yeah, I mean, the thing that, like, if you just look at the politics right now and how when Janet Yellen or Jay Powell or politicians that are, have strong financial ties, when they are speaking, what I read between the lines is, I think Janet Yellen said, recessions is a thing of the past. There's no longer going to be a recession. And like, if I hear statements like, it's... but they're basically outlawed. They don't want this anymore. So, and how to achieve this? Yeah, you basically just turn on the money printer and you keep everything jogging along. But by the first kind of situation where you run into a potential issue, you just anticipate this. So I don't know what I kind of believe them right now. They are probably not going to be able to keep that up in the long term. Eventually, the crisis needs to come, and there needs to be this let's say healthy reset where you flush out all the non-efficient zombie companies. But in the short term, I kind of believe them if they say there's not going to be a recession. So if we have this massive drawdown of 15-20%, if there is a correction or some structural issues, they're probably just going to do the same as they did in 2020, which is turn on the printer and higher we go. And I don't know, many people, like, for example, Raul Paul is mentioning this as well, or Arthur Hayes. A lot of course, crypto macro people are kind of telling you, yeah, there is, okay, so there's only two ways out of the issues that we have worldwide with that. The first is you print your way out, so you kind of print away the existing debt in making new money. And the second thing is you grow your way out. So that would be with, let's say, AI, production increase. The problem with the second one, to grow your way out, is if you have this AI and production increase, this will also increase the unemployment. And if you increase unemployment, basically you have deflation, which eventually also is going to lead to inflation. So I think if you just look from in a long-term perspective, what's the way out of this? How can we solve this? Is potentially both outcomes, or almost all outcomes, will result in money printing. Of course, they could do financial repression, and a president or somebody that comes up there and says, I'm going to get the spending under control, I'm going to raise the taxes, and we're going to have 10 years of suffering, but we really need to do this. But who is going to elect this guy? Nobody. We want free things. We want to have, yeah. So in the long run, I don't know. I think you cannot really go wrong with crypto and with probably, risk on stuff.
I think here's the fundamental question is going to be, will crypto behave more like gold? Meaning it's going to track inflation really well, meaning the purchase power over time is being kept. Is that, and that would already be a very, like, there's not many things like gold, right? Let's be very, very clear. There's very few things that over hundreds of years can hold purchase power. And gold doesn't increase purchase power, it keeps it, right? And it has been shown over and over again. So an ounce of gold, which like purchased the same thing 100 years ago, purchases around the same thing today, right? So the purchase power stays the same. Is that what's crypto going to do? Or is crypto going to underperform purchase power? Or is it going to be able to do what it did over the past 10 years, which is increase purchase power, right? And here's the thing I want to just point out. The only things that have seen to show to increase purchase power over longer periods of time, I'm not talking years, I'm talking decades, have been companies, right? Even real estate has been shown over long periods of times to hold purchase power, plus you get the rent. So the rent is basically the ticker on top. But actually the real estate itself has been shown not significantly to increase the purchase power. So I just want to be that's the interesting question that I think you need to have going forward. And obviously, if you look at someone like Saylor, he thinks you're going to have a multiple of your purchase power. If you listen to someone like Peter Schiff, you think he says, oh, you're not going to be able to keep your purchase power. And if you're someone like, okay, this is going to be more like gold, then you would basically see it as more holding your purchase power. So that is the interesting question. I don't know if you have thoughts on this, but I just wanted to throw that in.
Yeah, no, I 100% agree. Like, especially the real estate part that you just mentioned. I actually shared something in the tweet. So if you go to the pinned tweets on the space itself, you will see a chart that actually confirms what Julian just said. That real estate didn't really appreciate. Like, your house did not get more worth, but your currency, the underlying currency, decreased in value. And it's insane because, like, gold appreciated, I think, 8-point-something% over the last 100 years or so annually, 8%. And all that is basically holding up the currency power. So your money is basically, many people say, yeah, inflation is 2% or 3% a year. It's really not. It's more like 8-9%. And gold was able to basically hold these percentages. And the other way was to do that with companies. And the best way there was, of course, indexing S&P 500 or the NASDAQ. So, like, since after the .com, probably NASDAQ, was the best thing to do because tech has that exponential component to it. And it might just be the best thing.
Did you see this chart? I think, I don't know if Elon even posted this or someone. Did you see this chart about what the average return was over the last 100 years. So in total, the average return over 100 years, the average, what do you think it was? Over
On the
100
S&P
years.
500?
No, just as an investor. I don't know
I
exactly
think
based on what, but it's a US based. Yeah, but okay, so let me help you. The average return was about 223x. So the average return over the last 100 years, so if you had put in $1,000 100 years ago, the average was to have 223,000 US dollars today. But it's 100 years, a long time frame. Now here's the thing. What do you think was the median return? And just for those who don't understand the two differences, right? Median means I put all the investors, I line them up. Here's the worst one, here's the best one. I line them all up, and then I look at the middle investor and I look at what return did this guy have. The average return is I add all those returns up together and divide it through the number of people I added up. So obviously, and so to understand this, imagine 99 of us plus Elon go into a bar. On average, we're all billionaires. Median, we're not. Median, we're all lining up. Elon sits here on the very right with 200 billion, and us here, not billionaires. So that is a humongous difference between like using a median and an average. So the question I ask is, over the last 100 years, the average return was 223x. What do you think was the median?
not even half of that.
It's not
a
even
lot.
positive, dude. It's
Oh
not even
shit.
positive. It's not even positive. So meaning the normal investor loses money. That's just crazy. It's just crazy.
Yeah. I mean, probably with indexing, still right now, I would make the case that indexing is the absolute best and safest route for the majority of people. Because if you want to like most hedge fund investors, most investors, like as you said, they lose money, they don't make money, and then even the professionals tend to underperform the index. So for 99 out of 100 people, it's probably better to just go with an index, to just hold S&P 500 and the Nasdaq, and just DCA, sit on it, hold it, never sell. But of course, what people are after and what sounds so amazing is this picking alpha, picking this one asset class or this one stock that is going to outperform.
People want to be the giga chat. They want to be the baller.
Yeah.
Always.
Yeah. And I don't know, look, I still feel very comfortable or very confident that crypto and Bitcoin just might be the asset that can do it, especially over, let's say the next 10 years. But of course, there is always there's some risk to it. And actually how the traditional institutions are approaching this. So let's say the new school of index investors, of portfolio managers. I think their approach is actually very, very sensible, where they say, okay, look, they basically ditched bonds and they go full on indexing. If you look like Scott Galloway, for example, or Morgan Housel, or like the new school of portfolio managers, what they tell you is basically don't bother with bonds. You're going to underperform. You want to hold S&P 500, you want to hold the Nasdaq, and that's okay. But the new school of this, they add 5% Bitcoin, 1% Ethereum to that. So they're basically 95 to 94% in an index. And I think that's probably, for the majority of people, the most sensible approach. But yeah, saying that on a crypto space where, most people probably are 90% crypto and don't even hold an index, because who wants 10% when you can make 100x?
Of course.
Yeah.
Okay, listen, I need to jump out, so I need to do that random number picker thingy because I have a 6 p.m. call. I'll do a big update on everything next week then. It's fine. Nothing to rush, so don't worry. You're not going to miss out. Great. Then let's do this because many of you participated, and we are doing our weekly draw, $500. So just, if you also want to participate in this, go into the app, check all those various tasks that you have to do, and then your number here also gets added. For privacy purposes, we mask the last two, so here's all the various numbers, so you don't hear the sound effect. I hear it. So are you ready? 1 2 3. And the winner is 737 ***. So the *** is a different. So these are two different numbers. So congratulations. Please be careful. Someone from the team is gonna reach out and congratulate you. You're gonna get the $500 into your app. So please don't get scammed or anything. Just be careful. And obviously, if you want to share this on social and share your happiness, that would be much appreciated. Uh, yeah, with that, Fabio, thanks so much for the insightful space. I think we walked through everything. We just launched T bills. Check this out as well. That's definitely one that I just want to announce. So that's really, really cool. Obviously, it's a bit on the um, bond side, but it's short term, so it's not on the long end. The advantage of that is if you have USDC or USDT or something, you can simply get an attractive rate on that. Also, more and more smart bundles coming out. Check this out. We just started staking for Cosmos and Celestia, getting up to 12% of that. So check this out. It's quite exciting. So thanks so much, everyone. Fabio, appreciate it. Thanks so much for your time. See you next week, everyone. All the best. Stay healthy, stay safe.